The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everyone. Basil, Chapman sitting in for Tommy O'Brien. My show is usually this next hour called the Tiger Technicians Hour. My service here at TFNN newsletter is called The Opening Call. Let's get right to the markets. We're looking at the Dow. Yesterday closes with a sideways move at 42,215. The futures were holding pretty well. They were down, but they were holding pretty well when suddenly there was news with China, Trump and China. So we're seeing the market down quite. It was down much sharper immediately, but now it's come back a little bit. It's down 144 in the futures at 42,119. You can see this pattern. I'm going to talk about it in a moment, and I'll also do a lot more because today's Technical Friday. I do a lot more in the Chapman methodology in my show, but I want you to just to have a look at this. I must now move that trend line. There's a pattern that I look at, which I think is going to be quite important going into the summer, and that says that the weekly charts that we're looking at in almost all the indices are going to be very important. There's a technique that I use, it's called the 914. I developed years ago, where I use the 9-period moving average, exponential moving average, and the 14-period exponential moving average. If the price goes below the black line, that's the 14-period moving average, it goes pink. It could be red, but I wanted to make it pink to show the differentiation between the candles that are red and green. And it goes green, light green, when it goes positive. Well, the weekly chart flipped negative in the Dow back in March, about mid-March of this year. And it has not, even with a spectacular move, and when you're thinking about the Dow, look at this. The Dow comes back from the April the 7th low. From 36,661, this is the cash, and it goes all the way to the high of 42,842 a week and a half ago, Monday a week ago. And now look at it. That 9-period moving average in the Dow cash is so close to turning positive, but it hasn't yet. The futures has a wider margin between the 9 and the 14-period moving average. So to get that to turn green, you would have to see this trend line tackled, and that would have to be probably in June. But I'm anticipating, I've spoken about this for a while, and that would be up at the 43,900 area in the futures. I'm anticipating, and I've done this for a long time, all the way through May, I've been saying I'm suspecting that May could be quite a good month. It was even better than quite a good month. It was a very good month. But at the same time, I'm anticipating that coming into the end of May, the beginning of June, is where there's a really good chance that we will get some kind of hesitation, some kind of a digestive move. I want to wait for the market to open, so I'm going to do this during my show. But this is called, right here, this is called the Chapman Wave Dark News Index, DNI. And I use that only in specific areas. And for a long time, I'm talking about years, I would use the yields to draw a little rectangle and say, we're looking at a strong resistance besides the technical tools of trend lines, etc. And very often we would see a sharp pullback. And I would call that an internal high with a residual high. And most of the time you get an internal low with a residual low identified, and it turned out to be correctly that the 7th of April low was a residual low, and that we should have a rally and then some kind of a test and an H pattern, and after that will be the big clue. Well, look, there's the H pattern. Now we've run. At this point, I'm going to just do this to demonstrate, but I'm going to immediately take it off because I don't have the proof yet. But right here, I've been saying that even though we're long, I'm anticipating along the Dow, very long the Dow, I'm anticipating that there's going to be some kind of strong resistance in this area. Well, I need probably need the close today to confirm that. But we're getting to an area that I think is going to be strong resistance. Now, if we snap through that, that is fantastic action. So let's, yep, that's right. Okay, so the futures now are down 134 in the Dow. The E-mini futures, and I have to use the continuous contract right now because, let me just do this again. I have to use that because when I use the continuous contract, I can get the monthly charts. If I use the current contract, it doesn't give me as much information as I need. So the continuous contract is at 5898. The real thing is at 598. The E-mini futures is in June. And you can see, I don't want to go through this. I'll do this more in my show at 10 o'clock. But this particular cup formation, going to a high and then pulling back, says just be a little careful, especially with this doji, long-legged doji candle right here, that if we don't take out the high that was made, this is the E-mini futures, at 6,008 yesterday, that was the high. If we don't take that out in the next two sessions, but instead we start to pull back, and it might be a little too much, but I'm just going to say for now, 58.13, oh, that's a lot. I'd even say 58.45. If we go under 58.45 in the next two sessions rather than go to a new high, I'm saying that there's a real good chance that we have begun this kind of consolidation. I don't see a crash or anything like that, but I do see the upside being quite hesitant from here, but opening up the potential to make lower lows over the next week. That's it. Now let's go to the NQ. And I was asked if I would do a detailed study of the QQQ and the NDX 100. I'll start some of that in a moment, but most importantly, let me just get this done. So the QQQ, the E-mini NASDAQ 100 continuous contract made a peak E back in December of last year at 22,000, 651. That changes, it gets smoothed out. And we plunged all the way down to this low right here. Amazing, 16,460. And here we are tootling along at 21,326, actually down 85 in the NQ right now. But I'm going to talk about this in greater detail. What I am going to say is that this is Friday. For the first time since the market broke down back in March, I believe, yes, in March, where the 9-period moving average went negative, it just flipped this week to green. So I have to wait for the close today at 4 o'clock to see if it still remains green. That's the one that has flipped to green. But if you look at the S&P, I just showed you the E-mini. Look, the E-mini, 9-period moving average, so close to turning green, but it hasn't. Maybe by the end of the day it does. When it turns green, that's usually a good sign saying that this is giving. And now you can start looking at where the support is. Let's go to the RTY. That's the Russell 2000. That is still weekly chart. Wide pink between black. That's the 9 is below the 14. And it's got the 200-period moving average, which has been such a strong resistance both in the weekly and in the daily. And the RTY, the Russell 2000 continuous contract, is down 14,170 at 2,063. Now, Tommy does a fabulous job of talking about the interest rates, talking about the whole aspect of what happens, the dynamicism of rates. And let me just show you this right now. This is the bonds. Right now, the bonds are up for 30 seconds. But if you look at this arch formation, yields are still quite high. The bonds are down at the lows. I'll be back in a moment. Basil Chapman sitting for Tommy O'Brien.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. I was talking about the bond yields. As I say, Tommy does a fantastic job when he puts together the fundamentals to the technicals. I just want to mention, thank you, Flesh in the Den, CNBC, personal income increased 0.8% in April, almost triple the expectations. Just in, prices barely climbed in April, pulling the annual rate of inflation down toward the Federal Reserve's 2% target, even while personal income climbed at a rapid rate. So that's very interesting because, when you're getting personal income increasing, I think that's very important. So we've got the TLT in the gray leg. In my show, I talk about the notation in the Chapman wave, but let me just say we call it a gray because I haven't got any confirmation that there's a buy signal yet. But here's your arch formation. In my work, I look at this as an H pattern. Comes down sharply, rallies, fails at a peak A or a B, and then comes down, makes a lower low. In this case, it's gone back to a C, pulls back, becomes a C minus because you took out that trough on the left side. But you have two sessions in which to close above the low that was made. And so far this week, the yields, the bonds have gone a little bit higher, and you've got this H to M pattern in the monthly chart. Now let's do the TBT, which is the inverse. This is the yields themselves. So the yield spikes very sharply. This is the ultra-short Lehman 20-year Treasury bond ETF. And even though the price today is down, so the yields are down, the yields are, where are we going here? Up 37.43. Ah, there it is. 37.43 just hasn't shown the candle itself. And what we're looking at here is if the yields at 3.74 right now are able to slide under this low right here in the next week, that is the low of the 16th of May, the TBT, and that was at 36.36. If they can close under 36.36, I think at least for the shorter term, yields are not going to be a problem in the whole smorgasbord of all the economic indicators that we look at. But if we go above 38.23, you could very well see a leg D above the 39.70. Let me just double check if that's the correct number. 39.70 on the 22nd of May. If you start leg D above that, especially if it's, say, next week, that's going to suggest that yields are not yet tamed. They are still going to be going high. And that, I think, is an issue. All right, let's do a couple of things here. You got the GX, which is the gold trading down 21. The GDX, that's the gold miners, down 34 cents. Now, one of the things I look at in the Chapman wave, I'll have to do this a little bit more in detail in my show, is that if you get 4 higher peaks under the previous major high, it goes to a leg D. A is the first, B is the second, C is the third peak, D is the next leg. This is still a leg because it hasn't made a peak yet. I don't like that because very often, not very often, a lot of the time, unless there's an instant restart and within 3 bars it makes a higher high, I look at this and I say, that's actually a failure when you've only gone from a low to the 4th highest peak in such a short move. Look at the strong single legs up you got here. That says to me, uh-oh, it could stall. So I'm watching the GDX because now it looks like the upside on the GDX might be, it's at 50, at 49.96. The upside might be limited to the 51.50, 52 area. If it goes to 53.35, that's going to be really good. But if it starts to, by next week, if it just tags 40 underneath the 14-period moving average, which is at 49, if it tags 48.50, that's going to say, uh-oh, gold is going to take a breather. Fantastic move so far. Let's go to silver. Silver, what we're looking at right now, is trading down 14 cents at 33.27. Not going anywhere. It's basically been this rectangle formation, look, for some time, for at least a month. Look at that. Sideways action, not going anywhere. But it's not breaking down, it's not breaking up, it's just kind of stuck. But some of the silver stocks, just individual stocks, have done quite nicely. I want to go to high-grade copper. High-grade copper right now is trading up 0.01, really not going anywhere. It also is in this rectangle, more like a cup formation with a handle. But at 4.69, it's not giving us any clues as to what's going on next. Now, what's really important at this particular time is we want to have a look at the SMHs, which is the semiconductors. Semiconductors made a nominal new high, so at 243.18, down 90 cents right now. These cup formations are, so let me talk about this. So in the bigger picture, I'm looking at General Electric and Robinhood as kind of indicators. I would also include, say, the XLF or Bank of America, say, a financial stock. But just for the moment, let me show you what I'm looking at here. In the first of all, we go to the SMHs, the semiconductors, and look. There's been a resistance level at 246.38. It hasn't been able to, for now weeks, it hasn't been able to break through. It did go to 249.44. Which took out the 246 resistance, but it had a struggle actually closing up in this area. Even yesterday, what did it do? The semiconductors went, and that's all of the great news about NVIDIA. It went to 249, 240, let me just get that, 249.21. So it failed to take out that left side high. So that just says to me, we start to see some resistances. Now, I spoke about GE. Let me show you something fascinating. GE, I look at round numbers. Uh-oh, what did I do? I just said ping, ping. Did I do something wrong now? GE right now is trading down 1 pre-market at 243.10. Day before yesterday, it hit 246.00, round number. It looks like this could be a little toppy right here, but I always look at round numbers. If GE closes above 246 in the next 2 sessions, close. It can't just pop and then come down. It needs to close above it. That'll say you've opened the upside a little bit more. You can even go to new all-time highs. This is GE Aerospace. This is in there. Look at Boeing. I mean, so selective this market is. Boeing went to a recovery high yesterday into the right there, into the 212.28. It went to 212.28. Trading right now 207.40, down 78 cents. But it's become, since the April low, it's become a leader. So that's why I'm saying that in this particular market, there's kind of a rotational aspect. But on a very short-term basis, I could see some kind of digestive phase. So let's go to Robinhood. I should mention that we are long both Robinhood and General Electric. Look at this double top, 66.91 February, the week of the 10th. Excuse me, plunges down to the 30 area, and then zip all the way back, and it goes to a fractional new high, 67.17. That is 18 cents. Was it? 18 cents above the previous high, and no more than that. 70. And look at this. It's starting to get into resistance. And that's why I'm saying my charts are suggesting on the short term that there could be some resistance here with upside, just a bit limited, but maybe the downside is also limited. I'll be right back. Basil Chapman sitting for Tommy O'Brien. We'll be back when the market opens. Should be a very exciting day today. Last day of the month of May.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
back, and let's see, has the market open? Yes, the Dow is down. Let me just do this quickly. Here we go. IND, I like to do it in real time. So, I did it in the wrong place. So this is AESM 25. We've got that. Okay, I'm going to go to it live right there. Okay, we're looking at the Dow right now, down 88. So it's moving quite quickly. Down 110. So this is what kind of concerns me in the very short term, because we have a list of stocks for subscribers to my opening call that we want to buy. Stocks that we either missed or they just kind of got away from us, or stocks that we actually had. We took we got out of it, and we would like to get back in, and then they took off. So I'm looking at this and I'm saying, from the charts, does it suggest how deep would a pullback, where would the first real support level be? So the Dow's down 130 right now. First of all, it has to take out to make this H pattern. Oh, I should have had that already. I'll get it ready. Don't worry. Just a matter of time. So what we're looking at is the high of 42,842 in the Dow, made just over a week ago, comes down, makes an arch pattern. We can call this a gray A right now. If it takes out this level by Wednesday of this coming week, in other words, we need speed in another 3 days or so. If it takes out the low of the 23rd, which is at 41,354, closes under it, can't just take it out. Then I'm looking at the next level of support would be at about 41,150. And I just go step by step, because I need to see the width of the MACD. See how beautiful the MACD expanded as it ran up the green line? Well, if it comes down and the green turns to pink and it expands sharply, that says you've got time and price on your side to the downside. But we haven't got anything like that now. This is still holding very well. Look, the 9-period moving average in the daily chart is still positive over the black. So all I'm saying is, this is a work in progress. And now I need to emphasize, and I'm going to be doing that for the next couple of shows, sell signals only get generated when the sell signal gets upgraded to a sell mode, because the news that's out there, the market is it doesn't matter what the news is. If the market takes news and treats it negatively, how negatively, you'll see, because the Dow down 150 right now. These days, that's not a big deal. Down 500, that starts to be a big deal. I'm suggesting that in this period, going into June, this first period, this is where the market is the most vulnerable to selling. But there's been tremendous buying. You've been wrong if you haven't been buying each bit dip. So until that gets corrected by people buying the dip and the market still goes lower, you're not going to get any real sharp sell-off. So right now, those are the levels to look at. Where does it break out? First of all, the Dow closed above the high of the other day. 42,448 would be very good, but 42,842 is the level to break. If there's a close above that in the next week, that'll be really positive. All right, let's do the next thing, which is the S&P. The S&P right now trading down 23, 58.88. You see this right shoulder here? This is what I was looking at, and this is what I was talking to subscribers about when I do my market overview every Friday afternoon. I do an hour, maybe an hour and a half sometimes. It's almost like a webinar, but I just haven't had time to prepare a webinar. So this is just for subscribers to the opening call. Besides the work I do every single day for the subscribers, except of course Sunday, but Saturday and Sunday. So now what we're looking at is this. You see this almost cup formation, and what we're looking at is what's happening on the right side. So you've gone to there. Well, look at this. The MACD was very strong at the high of 59.68 just a week and a half ago. Now it's starting to weaken. The relative strength, the gray line, is weak. The stochastic is still good, but it's under 80%. It's 77%. The blue on-balance volume is holding well. So there are signs, technical signs, here on the bottom part that says, oh, be careful. But the wonderful 914 is still so strong. Even though we do have a short position, just a starter position on the short side in the S&P, and and probably going to make the stop even tighter today. And so far it is up. It's had a very nice big spike to the upside, but that's not the issue. The issue is, where is it now? And now it's above our entry price. But the fact is, this is a work in progress. There is still very good signs in the S&P at this point. It starts to become negative if it takes out the 14-period moving average right there of 58.47. But absolutely, if it closes under 67.41, that's the low of 5 sessions ago. Then you've got the dreaded H pattern. Oh, I said I'd show you that pattern. I'll do much more in my show coming up, the Tiger Conditions Hour. So I'm always looking at 3 core patterns in the market: straight up and straight down. That's one. A cup formation or a V-shaped formation going from one point down back to that point is 2. Doing the opposite, arch formation or inverted V pyramid formation, going from one point up and then back again, that's it. So that's 1 and 2 or 1 and 3. If you mix 1 and 3, in this case, it's the H pattern, the dreaded H pattern. So where are we right now? We haven't even really formed it, but there's an arching over, and that's what we've got to be careful of. And if it closes decisively under that left side low, then I would look at the 200-period moving average of 56.73. If there is a move above 59.70, a close above 59, now make it 59.73 anytime in the next week, I'd say that stalls any pullback. You're going sideways to up. That's much better than going sideways to down, which is my anticipation right now. QQ. Anticipation doesn't mean we've started to prepare for that. We've taken nice profits in all our long positions, but at the same time, we've kept those positions. I don't want to change those because getting into them, we got in really nicely. It's going to be hard to get in that way again. So now what we're looking at is the QQQ. The QQQ is trading still over the 9-period moving average. The 9-period moving average is way over the 14. The 200-period moving average is down at 487. I suspect in June we're going to test the 487 level, but you've got to arch over and take out this low that was made on the 23rd, which is at, was that Friday? Wait, what are we talking about? Yeah, that's right. We had a holiday, right? So this is the 23rd. The high was 511.84 and the low was 505.58. So that's quite a way to go down, but that's what I'd be looking at. A close under that says, be very careful. There's a really good chance that at some point soon after that you get to the 487 level. Now, because I've spoken about this as being a sideways retest of the high, which is the highs that we're talking about right over here of 519.86, and we've already been to the 526.48 level. That's just saying, if we break above that, if we go to anywhere around 530, then you're looking at the high of January, the all-time high of January the 19th at 540.81. And so far, look, the MACD has just dipped a little bit lower. The retro strength is a little bit weaker. The stochastic still at 85%. That's great. And the on-balance volume is still good. So it's going to have to be bad news that's in the marketplace that the market perceives as bad. That's the only way you're going to go down. If it's kind of just okay, buyers will come in. I'll be right back. Basil Chapman sitting in for Tommy O'Brien, Morning Market Kickoff.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tommy O'Brien, and we're looking at the SMH is down 4 at 240.07. Remember I said this kind of double top, a lot of resistance in the 249 area. How it breaks on if it does, it takes out the low of the 23rd, which is at 234.59. That's going to be very important if it does. And the 200-period moving average of 230.33 will be next. And that's why I'm saying I'm anticipating this is really not a serious bad news thing. Look, Dow's down 84, S&P's down 23. You just could do that in not even 5 minutes, 2 minutes during the intraday action. So what I'm saying is that to get negative on the general market, really negative, you need to have this cloud of dark news. The market just all of a sudden, everything that was said up until now has been received positively. Could be down 500 points, but the next day it's up 700 points. It'll change if that dark news really permeates the market. The longer it permeates, the deeper you'll go down. But at this point, I'm just saying a breather. At this point, I'm saying there's a chance that all the good news is out, and it's really going to take a lot to get this market to accelerate to the upside and hold the upside rather than just keep making these highs and getting resistance levels that are starting to impact. So with that said, and that's not like a big negative thing, as I say, we're long positions, we have a short position. So far it's working. Not the issue. The issue is I want to see what happens next week by Tuesday or Wednesday. So with that said, the semis are really important. And if you go to NVIDIA, which should be soaring on that fantastic news, it's down to at 137. It hasn't made the all-time high of 153.13. We'd had 136 round number open in January. It's very unusual for a monthly chart to have a round number at the open, and that's exactly what happened. So anytime in 2025, if it closes not at 153.14, 1 penny high, but if it closes in the 160s on a monthly basis, that'll be fantastic. In the meantime, I'm anticipating that over the next week or two, we might see 137.18 right now. We might see 131 to 128 if there is weakness going into Tuesday for NVIDIA. Okay, now I did that, and then the question came in. What about stagflation? Well, I'm not an economist, and all I can say is that stagflation is where companies cannot raise prices, but the inflation rate, it remains kind of high, and they stuck. They don't know they can't raise prices because of either competition or whatever it is, and you're just stuck. So that's stagflation. I'm seeing something a little different here. I'm seeing a work through of ideas. Ideas, I mean, there's no way that you can't say that in the first, I would say 100 days, sure, but we could go in the first week of President Trump's inauguration. I mean, once he was in the office again, we had hundreds of different changes that were made to policy, to whatever. So the market is digesting all this, and at this particular point, it's handling it quite well. I mean, look, the market, Dow's come back. It's only down 29, 39, and the S&P's down 18. So that's why I'm saying to get a real sell-off, bad news, bad news, bad news. You gotta have it. If the market takes any news and treats it like good news, it's not going to go down, and it's not going to go down for long. So I'm just saying, I don't see. It's complex. You get stagflation at a certain point, and you can see the signs. And I don't see those signs right now. I think some areas, for instance, Procter & Gamble, up today, it's able to handle healthcare products. Procter & Gamble, PG is a symbol, up 88 cents at 169.44. Let's see what, let's go to McDonald's. McDonald's, MCD, is up at 253 at 314.39. So some companies are able to at least alleviate the pressure of, let's just call it higher prices for a while. So we're looking at that. Okay, so I really can't answer that. Maybe I'll have a better sense in 2 weeks' time, but I can't really say anything today. Next question came in about FSLR. This is First Solar trading up 291 at 158.86. It made a peak D. Now I'll do this maybe in my show. In my work, I just do this real quickly. I try to identify the lowest low bar and count each higher peak, and each higher peak is alphabetized sequentially, uppercase on the way up, lowercase on the way down. Peak A, the 1 penny above A starts leg B, and then if it makes a peak B, that becomes a peak B. Then 1 penny over B starts leg C. If it pulls back, makes a lower high, that becomes a peak C, D. So you go A, B, C, D, E, F, G. D is the objective. Buy signal to buy mode is what you really want in the Chapman methodology, to be able to say that we've upgraded from a buy signal to a buy mode. It should go to at least a D. At D, other things can happen. I couldn't even tell you how many thousands and thousands of times over the 22 years or so I've been here at TFNN, we've seen these Ds become important. It can go to a G. There's never an H. So it went to a G. First Solar went to a G in December of 2024, up in the 300 area, and then it had a little bit of a tumble down to the 100 and, what was it, 15 was it? Yeah, 116.56 low back in the week of the 11th of April. And now it's had a really good run. And then it had a gap up. And that gap up on the 13th, 14th of May went all the way to 198.87. And suddenly turns around, fills the gap, and now we're in the gap. I don't see anything right now for First Solar. I think it's digesting. If it takes out, it's 156 right now. If it takes out, if it closes under 140, I'd say 140, 150. If it closes 150, that's a real problem. It could stall here, but the resistance at 188 at the 200 period moving average. Oh, this is not 188, it's 168. Sorry, 168 is so strong that I'm not sure it's going to be able to break through in one move. So just to sum up, First Solar, I don't see anything right now. Another question came in. Let me just move this away. Okay. Yeah, high inflation was slowing demand. That's stagflation. Thank you, Ron in the den. Yeah, it's just as simple as that. Don't make it too complicated. But we don't really see that at this particular point. That's what you could see, but we haven't yet. I mean, when consumers have a higher income, and today, what do we see? We saw that the rate. Let me just do this here quickly. Oh, we've got a break coming up. Well, we saw the personal income, I think, was up very nicely. All right, with that said, I'll be back. Basil Chapman sitting in for Tommy's show, and the Dow is down 100 and the S&P is down 29. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, we're back and we're looking at the Dow down 64. Not a big deal at 42,150. What I'm going to say is this: let's go all the way through to this coming Wednesday. if by Wednesday the Dow has managed to spike above the 42,842 level, that would be very impressive, because now we're into June, and I'm anticipating that this first week or two of June is where we're going to get a test of strength. But what I've been emphasizing, and I'm going to emphasize it every single day, is that until there is news that the market perceives as bad news and then perceives as very bad news, buyers will keep coming in. They've just been doing that all the time. So with that said, I want you to go through just one or two things. Our newsletter, the opening call, we remain, everything we have is on the long side, except when we have a short position in the S&P. It's a starter position, aggressive, but a starter position, small position. And one of the reasons why I've done this is that I've got a lot of information on the charts that are saying there's a lot of resistance overhead. You're going to have surprisingly good news to break above it and then to hold those positions. And but at the same time, I don't want to be aggressively short at this particular moment, because the news is still being perceived, even today, the news is being perceived as positive. So, I mean, we are down 60. We were down 100 and something just now, but buyers keep coming in. It is the end of the month, so we'll see if this follows suit to the beginning of the week, first week of June. But at this particular point, I'm just a little cautious. There are stocks that we want to buy, stocks that we've missed, stocks that we've wanted to buy, but we had other positions and we were focused on them. So I'm waiting for a dip. I'm not really looking at the short side at this particular point in anything other than to have an index that should pull back. And if it pulls back, very good. Some of the stocks that are looking kind of toppy, I'll be looking at them next week to see if maybe they are short, or maybe we'll take a put option or something like that. I don't know yet. But at this particular point, I'm just stepping aside just a little bit to say, let's see how the market acts, because it's the end of the month. We want to see these monthly candles today at the close. How do they respond to the market for the full month of May? Going from the April low to the May highs has been very impressive. I'll be back for the time.